So we got a full agenda today. We're going to go through and hit a lot of things at kind of a high level, but some of the things we want to drill down in detail. But I want to start off just by kind of having you guys answer a question internally. You don't have to chat or even try to voice it. Just just kind of think about this in your mind for a second. In 2018. It was reported that the most small businesses changed hands that year than in any other year in the prior 25 years and maybe in history. It was a very active resales market in 2018. By the way, 2019 and 2020 are close to that. But 2018 was by far the most active year in the last 25 years. In that year where the most active business resale market ever, how many businesses that were quote on the market do you think actually changed hands that year, percentage wise? How many businesses in the most active market ever that were on the market do you think changed hands? The answer to that question, and I'd like to answer that question, but my computer is kind of froze up here. There we go, is 24%. So I bring this up to you guys just to let you know that when you go to sell your business, the odds aren't always in your favor. There's a lot of businesses out there that go to market that don't sell. And so we are today going to go through some things on our agenda that at the end of the day, we're here to try to help you, build a sellable business and to build a business that's going to stand out in a very increasing business market field that we're going to talk about what that market looks like down the road. So today we're going to talk about the importance of preparation, of getting your business ready to sell. We're going to go through some valuation methodologies and how you calculate the price for your business. And then we're going to talk about the market, both the current market and as well as what the future market may look like. Then we're going to give you some tips and some ideas on how to maximize the value of your business and some do's and don'ts geared toward increasing that 24% sell-through rate, okay? And then the last thing will just be a 1-minute commercial about how Sunbelt maybe can help you in this endeavor, okay? And I should say that, everything that we talk about today, guys and gals, it's gonna be pertinent for you, whether you're thinking about selling your business in the near future, a year or two, or you're still, 10 or 15 years away. A lot of the stuff that we're going to talk about today is, time tested, and it's been, proven. And so it's definitely information that's gonna age well. All right. So when you go to the succession planning of your business and the exit of your business, you obviously have several options to consider. You might have a family member that is going to be your succession plan, or maybe you have a key employee or a general manager or somebody like that who you think is going to be the person who's going to buy your business, or a friend. You may think that, I'm going to milk this cow for all it is, and at the end of the day, I'm just going to close it down. I'm going to liquidate it, and there are lots of people that do that. I have the word yuck after that just because, number one, I don't think that benefits, you guys from a maximizing the value of your business standpoint. Liquidation typically gets you the lowest return possible. It's also not obviously a great scenario for the HPBA. They lose a member. It's not obviously a great scenario for Sunbelt. We don't get an opportunity to help a client sell their business. So from everybody that's involved in this webinar today, it is a yucky thing, but it's also a true situation for some owners. They just decide to liquidate and wind it down. Or you may decide to go the third-party route and sell your business, which Sunbelt specializes in doing. The point of this slide is this, though. You, as the owner of your business, and only you, will determine the path that is right for you. You're going to pick which way that you want to go when it comes to the succession planning of your business. But if you decide you want to go the route of the third party, I think it's really important that you understand a couple things. Number one is you need to know what the value of your business is now, even if you're still multiple years away from selling your business, because you may have a price in mind that you want, and so therefore you got to kind of build a roadmap of, okay, if my business is worth X now and I want it to be worth Y 5 years from now, what am I going to do to get it to that point? but you also need to understand what drives value of an existing business on the resales market in the eyes of potential buyers. What do buyers look for? And I will tell you that while financials, of course, always rule the day, there's lots of other factors that we're going to talk about today that buyers also look for, that if you have those attributes built into your business, it's going to drive value. So let's talk about valuation methodologies. The first thing I'm going to mention to you when it comes to valuation methodologies is this, and that is there's lots of different ways to value a business. By the way, I was giving this similar presentation to a group of pet store owners, and I happened to mention that when it comes to valuation, there's lots of ways to skin that cat, and I got a lot of gas from the audience, and I was told that that's skinning a cat and killing two birds with one stone are two phrases that you stay away from when you're talking to pet store owners. But anyways, there's lots of different methodologies for valuation, and each methodology comes with a set of pros and cons. Okay, so there's good, there's good things about each valuation methodology. There's bad things about ones. So some of the valuation methodologies that are out there that you may have heard of or investigated online include, asset-based methodologies, gross sales-based methodologies, comparison-based methodologies. And then there's one that we business brokers really like to focus on, and that's based on owner benefit. And it's also called the seller's discretionary earnings, or the SDE methodology. And so we're going to talk a little bit more at length about SDE methodology and why we like that here as we move through the presentation. For years, and I've been working with Sunbelt now for almost 19 years, and I work with over 100 different franchises, trade associations, and buying groups. Basically anybody that has members underneath it, and work with over 100 different national brands like that. And I can tell you that each brand and each industry has a methodology that is based on gross sales. And typically it's, hey, your business is worth 30% of your gross sales, your annual sales, or it's worth 40% of your gross sales, okay? The problem with gross sales methodologies and the problem with that average formula is this. If Rich has a business that's doing, $1 million in sales, and I have a business that's doing $1 million in sales, under the gross sales methodology, they're worth the same amount of money. But if Rich's business was producing, $200,000 in owner income for him, and mine's only producing $75,000, which business do you think is more valuable in the eyes of a buyer? Which business would a buyer pay more for, right? And look, guys, I'll be very blunt about this. When a buyer comes into a business brokerage office and they sit down with us, and they tell us, what they're looking for, what their passions are. We find out what their skill sets are, et cetera. And we start showing them businesses that we think are going to, fuel their passions and meet their skill sets and meet their lifestyle objectives. The very first question they ask about those businesses that we show them is, how much money can I make? That's what they are concerned about, right? So the gross sales methodology doesn't address that, but the seller's discretionary earnings methodology does. And by the way, your concern when you go to sell your business is not so much, how much the buyer is going to make, but it's also from a banking perspective. How much is the bank going to loan on my business? And again, the banks aren't going to look so much as at the top line of your business, but they're going to look at the bottom line. They're going to look at your benefit. So that's why we focus on the seller's discretionary earnings numbers, because it's the most important number, we think, to both a buyer as well as a bank. So here's where the rubber kind of meets the road. If you have a small business and the business doesn't have a lot of owner benefit or seller's discretionary earnings, or we also call it owner cash flow, then your sales price is going to be determined typically by the assets in your business, okay? And by assets, we're talking about your inventory, your furniture, your fixtures, your equipment, Maybe there'll be a small amount of money in goodwill for your trade name, but it's going to be basically, a finite number that's going to be based on physical assets. Okay, but if you have a profitable, well-run business, those businesses can typically sell for a lot more money than assets by using the other valuation methodology that we're going to focus on, called the seller's discretionary earnings method. So let's talk about the seller's discretionary earning method. It is one of the most common methodologies used by business brokers, and business brokers use it because it tends to maximize the value of the business for the seller. And in a typical transaction, the business broker works for the seller. So the business broker and the seller are both, on a congruent plane as far as wanting to maximize the value of the business. So when business is good, the seller's discretionary earnings, or SDE methodology, tends to maximize value of the business. So the brokers prefer to use that methodology. So what is seller's discretionary earnings? Well, it's not just profit, okay? It's not your EBITDA line. It's everything you as an owner take out of the business. So let me give you an example of a quick and dirty way in which you're going to calculate your seller's discretionary earnings. Yeah, you're going to take out your last year's tax return or your last year's P&L, and at this take out a blank sheet of paper to calculate SDE. You're going to start by writing down your bottom line profit. Whatever your profit number was, whether it's positive, whether it was zero, or if it was negative, start by calculating your SDE by writing down your bottom line profit number. To that number, you're going to add back any non-cash expenses. Those typically are depreciation and amortization. Okay, so you're going to add those numbers right off your tax return. If you had any depreciation or amortization, you add those numbers back. You're also going to add back any interest expense you paid. We assume that the buyer will be a cash buyer and won't have to worry about paying an interest. So you add back interest costs. You then are going to add back any salary you took. And by salary, I mean a paycheck, okay? If you take draws from your business, that doesn't count because that doesn't hit your P&L. But if you take a salary and run it through payroll, you're going to add back whatever salary you took. If you own a business where you are basically absentee and you took a salary, we're going to add that. And we're also going to add back your manager's salary, because we assume the buyer of the business is going to be a hands-on owner-operator. Okay, so we're going to add back the salary of the owner, and we're also going to then add back any other expense items that are on the P&L that are provable. In other words, you got receipts for them that may be more personal in nature. So, and this is where it's kind of at each business owner's discretion on how much they do with this kind of stuff. But I'll give you an example for myself. I run my businesses pretty clean, but I do pay my health care through my businesses. Okay. Other people pay their car leases. Some people pay their daughter's college tuition. We're not the IRS. We don't care what you do. What we do care is we want to capture every possible dollar that's a benefit for you as the owner of the business, so we can maximize the value of the business. So you're going to go through your P&Ls and your tax returns, and anything that's more personal in nature, you're going to add it back to that sheet. Adding all of those things up, that is your seller's discretionary earnings dollar, okay? And once you have calculated that seller's discretionary earnings, we're going to, in order to find a price for your business, we're going to apply a multiple. Now, I will tell you that multiples vary. They vary by industry. They vary by companies within industries. They vary by a host of factors that we're going to talk about here in an upcoming slide. So there is not one size fits all for all HPBA businesses, for example, right? But as a rule, multiples are typically 2 times that seller's discretionary earning numbers on the low side, and it's 3 times on the high side. And most businesses fall into a smaller range of about 2.25 to 2.8. Okay. Now, again, this is national averages of businesses all over the country that we've sold. Okay. Each business is unique, And the attributes of your business are going to determine what that exact multiple is. So if you're using this methodology on your own to try to figure out at least what a range of the price is, then you can go ahead and say, okay, calculate SDE, times it by 2 times, that's the low value, times it by 3 times, that's the high value, and know that your value is probably somewhere in between, okay? But we've seen retail service businesses, distribution businesses, we've seen them sell for less than 2 multiples, and we've seen them sell for greater than 3 multiples. So again, it all comes back to what is the individual facets and factors in your business that are going to determine what the multiple of your business truly is. But just to give you an idea today, it's two times to 3 times that seller's discretionary earnings number, okay? So I want to reiterate, when we're talking about price is not just a function of your financial data. The financial data is the biggest driver of price, that is for sure, but the value of your business is also going to be based on lots of other factors that are unique to your business, which include your assets, your inventory, your market position, and a host of other factors that we are going to group into either a growth-oriented factor, which leads to higher multiples, or a risk-oriented factor, which is going to lead to a lower multiple. So let me move on to the next slide and just give you a sample of kind of the things that we look at to figure out what the true multiple for an individual business will be. Okay, so on the left, you have about 7 or 8 different factors that we would say are growth factors, okay? So if your industry is a growing industry, if you have a proprietary product or a very high barrier to entry, that leads to higher multiples. If you've got a strong brand, and whether it be a franchise brand or just an independent brand, but you're really strong in your marketplace, if you've got a high market share, that leads to a higher multiple. If you have any intellectual properties, any patents, things like that, that leads to a higher multiple. We also look at your consistency in growing your business. If you're coming off 3 really strong years where you had positive year-over-year sales increases and positive increases in your owner benefit, those businesses typically will sell for a higher multiple than businesses that are coming off of 3 years where sales are declining or cash flow is declining, okay? We look at customer diversity. If you have a business where one customer is 50% of your business, that business has a lot lower multiple than a business where the biggest customer is less than 3%, okay? So if you got a lot of customers, that's great. Financials, I have the word audited financials there. We don't necessarily need audited financials. What you do need, though, is prepared financials. You need to be on top of doing monthly summaries, monthly reports, year-end financials, and getting your tax returns done on time. I was contacted again just last week by a gentleman in a different industry. He has a franchise business. He wanted to sell. He told me he has not done his taxes in the last 3 years. And I told him that I cannot help him sell his business because no buyer is going to buy a business without a tax return attached to it, and no bank is going to lend on a business without a tax return attached to it. So keeping good books, keeping good records, very, very important to maximizing the value of your business. So those are just some of the kind of the factors that we're going to look at. And again, this is not to be meant to an all-encompassing list, but it just kind of gives you an idea of just some of the things that we look at to see what kind of multiple your business should be at. On the flip side, if you're in an industry that's going down, it's going to hurt your multiple. If you're selling just basic only on price and really don't have a service, a service story to tell, you're going to have a lower multiple. I mentioned the inconsistent revenues and earnings. If they're down the last couple of years, that's going to hurt you, right? If you got that large customer concentration, 50% from one customer, that's really going to hurt you. Also, if your customers don't repeat from you, that hurts your multiple, right? I mean, if you can say to a buyer, hey, look, not only do we have 500 customers, but those guys reorder from us 90% of the time. So these are just some of the factors that we look at in helping determine what that final multiple for your business should be. So the value adders, of course, were on the left. The value detractors were on the right. So again, the summary of that previous slide just is this: buyers want to buy a business that has good cash flow and as many growth factors as possible and as few risk factors as possible. So if you can build your business, and again, whether you're going to think about selling in a year from now or 10 years from now, if you can build your business where you have more growth factors than risk factors, you're not only going to attract more buyers, but you're probably going to sell for a greater amount of money as well. And look, given what the resales market looks like coming up in the future, the ability for you to attract buyers is going to be critical. It's going to be absolutely critical because the market that we've enjoyed for the last few years is going to change, and I'm going to go into that a little bit more here later on. A couple other considerations to think about when you're selling your business. Look, you may have a plan that says I'm selling my business and I'm retiring when I'm 70 years old or 65 years old, and so that happens in 2 years from now, and that's when you're going to go to market. And that's fine. If you have a good business, it really doesn't matter what market you sell your business into. There's always a market for good businesses, right? Even when we went through the great recession here back in 2008, 2009, 2010, businesses that were good businesses still sold. What didn't sell was businesses that were bad businesses because nobody wanted to take any unnecessary risks back then. But good businesses will sell. But you really should make sure that if you could time it right, if you had a crystal ball, you'd want to sell when the market was good, when the market favors sellers, right? I mean, the market's favored sellers really since 2016. We're enjoying a nice 4.5-year run of a seller's market, sans a few months of COVID last year. So it's been a really good time to sell your business. And if you had that crystal ball, you could time it where you're going to be selling into a market that is great. And an economy that was good, right? The economy is always going to be something that you can't control, of course, but you want to at least understand what the market is you're selling into. The other one, that we'll talk about is supply and demand. As I mentioned, we're on a run right now where the last few years have really been a seller's market, meaning we've had more buyers than we've had sellers. And that creates competition for every listing. That creates higher prices, right? So, if you wait and the market flips to a buyer's market, which it's going to, and I'll tell you why in a minute, then you lose that element of competition, and buyers become more picky, and buyers, have lots of other choices, and therefore it's more difficult to get your business sold. And the upcoming supply-demand issue, I think, is going to overshadow any economy issues that we may see here in the near future. So before I talk about that, though, I mentioned COVID. Let me talk about COVID and just what we've seen and what we think we're going to see here as we have went through the pandemic and now we're kind of emerging from it. If you're thinking about selling, there's still a little bit of jury still out on this. But here's what we thought, or here's what we've seen, and here's what some banks have told us, including SBA lenders. That's what I want to kind of talk about. But from a market standpoint, overall, we had a slowdown in sales back in March, April, and May of last year. And since then, the market in most areas has returned to pre-COVID levels or have been even higher. Business brokers are super busy right now selling businesses. And really, if the business that you have increased sales in 2020, we're finding those businesses to be even more sellable than ever before. When buyers are coming in right now and we find out what they're all about, then they say to us, hey, I want to see businesses that are making money, and I want to see businesses that are COVID-proof, that survived the pandemic. And I will tell you that, while there's a good number of businesses that didn't survive the pandemic as far as sales go, and they got hurt in 2020, there's about 20% of the businesses out there that actually saw increases in sales. And I think you guys are in some of those industries that saw increases in sales in 2020. Buyers are buying those businesses up, and they're paying higher prices. In the fourth quarter of last year, prices were up 6% compared to the fourth quarter in 2019. So good businesses are still selling. Businesses that increased in 2020 are still selling, and they're selling for higher prices. But if your business decreased, then here's where kind of the rubber meets the road. And again, this is from conversations with SBA lenders and other bank people. Your current run rate, your 2021 run rate, is what's being analyzed right now. Okay, if you decide to sell your business right now, we're going to look at your 2021 numbers, and we're going to compare your 2021 numbers to your 2019 numbers. Okay, so if the business is bouncing back, then we can, in most cases, just remove 2020 from the analysis. So if 2020 hurt you, but your 2019 was good and your 2021 looks like it's going to be good, we can remove 2020. In other words, it won't hurt your sales price of your business. However, if your 2020 was down and your 2021 is still down, then that kind of becomes the new baseline for your valuation. And obviously that's going to hurt your value. So the other thing that the bank is telling us is the price you put on your business needs to be supported by your 2020 numbers, but also by your 2019 numbers as of right now. And that will change later this year when 2021, gets to be 9 months old. So again, if you had a great 2020, you might be able to capitalize on that, but you're not going to maximize the value of your business based just on 1 year, because 2019 also has to be able to support the price for the business. But if your 2020 was down and your 2019 was good and your 2021 is trending good, we're going to be able to probably remove the 2020 analysis from the computation of your price, and you won't be hurt by it. So it's been, it's still very fluid, but it looks like, there's going to be adjustments for whether your business is good or bad. 2020 will be adjusted and normalized. So buyers are going to look and banks are going to look at 2019 and 2021. By the way, if you received any type of government funding during COVID, whether it be a PPP loan or EDIO loan, those obligations have to be satisfied before your deal closes. If they're not going to be satisfied, at least the PPP won't be satisfied yet, then you must get permission from your lending bank to go ahead and sell your business. And what happens there is, if you sell your business with an outstanding PPP loan, that PPP loan cannot be assumed by the buyer. You're still responsible for it. So the amount of the PPP loan is put in an escrow account. And once you get approval that your PPP loan is forgiven, then the escrow funds are released to you. If your loan is not forgiven, then the escrow funds are released to the bank. Okay, so that's how we handle outstanding PPP stuff. The other thing that I think is really important if you're thinking about selling your business now right away is, the federal government's response to COVID really helped buyers and sellers during this kind of uncertain time. There's been 2 stimulus packages, as you're probably aware of. The first one went into effect last March, March of 2020. The new one went into effect February 1st of 2021. The new one provides buyers with a reduction of loan origination fees through the SBA, as well as 3 months of free payments. Now that incentive expires in September, the end of September. So it's, we're only got about 3 months left of this incentive. But if you have a business that you're trying to sell right now, or thinking about trying to sell it right away here, there is a sense of urgency to get it on the market, because this is driving buyers to buy businesses. It really is. The lowering of the fees, which typically cost thousands of dollars to originate an SBA loan, plus the 3 months of free payments, buyers are really finding that incentive very much worthwhile. And if you couple that incentive with the fact that we still have relatively high unemployment. I know the numbers come down a lot here in the last 6 months. but we're still looking at 4 to 5 million people are unemployed. You still also have a very high number of people that have job dissatisfaction right now. These are people that are either working from home and never wanted to work from home. These are people that have been asked to, to do other roles and other responsibilities in their organizations that they never signed up for because other people were either let go or downsized. So we just have a lot of people out there right now that are working that are not happy with working. And those people, between them and people that are unemployed, they're turning toward entrepreneurship. They're looking at buying into businesses and becoming their own boss. It's like all of you did at one time or another. So they're really, it's really flooding the market with buyers. And that's why right now we got a lot more buyers than we have sellers. This is why we have a buyer's market or a seller's market right now, because buyers are out there. They're also out there with historically low interest rates. So buyers are able to leverage their money and not pay a ton of interest. That's very attractive to them. And look, we still have a near record stock market. We still have really high home values. So the equities that buyers use to buy businesses, basically their home equity or their 401k stock portfolios, are in really good shape right now. So buyers have a lot of cachet. They have a lot of equity. So 2021 has proven to be a really good time to sell your business. And if it's SBA financeable, it's even a better time. The supply and demand are in harmony now. There's actually more buyers than sellers. But as I mentioned and kind of preluded, it's going to change, and it's going to change in a dramatic fashion. And that's because the baby boomers are retiring. And it is estimated that, the 78 million baby boomers in this country, they own over 2 million small privately held businesses. And all of those businesses, according to Bloomberg Financial, on an article that they wrote back in January of 20, they said that all the baby boomer businesses in this country will go through some kind of transition between January of 2020 and sometime in 2037. So over the next, now 16 years, all of those businesses that baby boomers own are going to go through some sort of succession plan. And as we talked about in the very one of the early slides, some of them will go to family members. Some of them will be sold to key employees or friends. Some of them will just be liquidated and closed, but a lot of them are going to go to the resales market, to the third-party market. And when you take a cluster of maybe an additional million businesses and you throw it onto the already businesses that are already on the normal business resales market, and I think that we're going to see unprecedented number of businesses for sale come into the market between now and say 2026, and that'll last for a good 10 years. It's going to be just really, really it's going to turn into a buyer's market because there's going to be so many different businesses out there. And we're starting to see that already. We're starting to see a lot of our business listings right now be baby boomer business owners looking to get out and retire. So, that fact, guys, is not exactly good news for current business owners, because the market is going to shift. It's going to dramatically move to become a buyer's market. And so, when that happens, again, buyers who have choices become picky. Buyers who have choices, they get to target their purchases. They get to, lowball their offers. They get to be really in control of the process, where right now we're in control of the process. The sellers are in control of the process because we have more buyers than sellers in the marketplace. So, it's really a tough situation that business owners need to plan for now. Business owners like yourself need to ensure that whether you're going to go to market a year from now or 15 years from now, that you have a sellable business that's going to attract buyers when you are ready to transition. And really, that's what this presentation is all about. That's what the presentation that preceded this one was all about, called Building a Sellable Business. HPBA recognizes this trend. HPBA recognizes that people who are going to be looking to sell their business, in the next 3 to 15 years, are going to have, are going to be in a very competitive marketplace. So they want to have you guys, have access to resources like us that's going to help you build a sellable business that's going to stand out in a field, even if it's a very, a very crowded field. You're going to have a business that buyers are going to, that are going to come to, that buyers are going to look at, and hopefully that buyers are going to pay a fair price to. And look, this is a very, important distinction. There's a lot of business owners that will be selling their business in the next 15 years that are not properly preparing for the end. They're, you guys just being on this webinar today, I think are getting knowledge and information that most other business owners don't know. And you hopefully will put it to good use, because it can be powerful. It can be the difference between whether your business sells or not, or whether your business sells for a good price or not. So it can be very financially rewarding. So my hat is off to you to taking the time today to listen to some of this information. Hopefully you can, continue to build a sellable business, a business that buyers are going to find attractive by, adding those growth factors and reducing those risk factors. That's going to help you have that sellable business. And it all starts with preparation. And again, it's never too early. Even if you're 10 years, 15 years from selling your business, now's the time. Start preparing. Understand that buyers are typically going to conduct a 3-year look back when they're looking at buying a specific business. Okay. So if you haven't been preparing for the sale for the last 3 years, that doesn't mean you can't sell your business. It's a good market, but you're going to want to, if you're going to sell, 10 years from now, you're going to really want to focus on those last 3 years before you go to sell. I already talked about the importance of having good financial books, right? Good, organized, clean books. And we've also talked, about the fact that buyers want a business with as many growth factors as possible and as few risk factors as possible. So if you can build your business that way, again, you're going to attract buyers, you're going to sell for more money. Understand too that the timing involved in selling a business, right now our average to sell a business from the date of list to the date of close is right under 8 months. We always tell sellers of businesses to expect at least a 6 to 9 month sales cycle when your business is priced and packaged right. So the day you put your business up for sale is not the last day you're going to work in your business. And it's certainly the day you sell your business is probably not going to be the last day you're working your business or working your business. So understand that this is a process. It's not an event. It takes time. It takes time to plan for it, and it takes time to go through the entire process to sell your business. Okay, I'm going to shift gears a little bit. I'm going to give you guys some practical advice on how to sell your business. And this advice again is germane whether you're thinking about selling now or 20 years down the road. It's also germane whether you think you're going to try to sell your business on your own or you're going to use a business broker. But it's just, again, time-tested practical advice on what to do and not do when you go to sell your business. The first thing is to market your business confidentially, okay? I'm sure that most of the people on this phone call have probably sold real estate or a house or two in your lifetime. Maybe you've sold some commercial property in your lifetime. I will tell you that selling a business is a completely different science than selling real estate or selling commercial property. It's very analogous to comparing baseball to football. Both are sports, but they both have a completely different set of rules and a completely different set of players, i.e. buyers and sellers, okay? And the biggest thing that I can tell you the differences between selling a business and selling real estate is the confidential aspect of how to sell a business versus the open door marketing of real estate. I mean, when you're going to sell your house, what do? You put a for sale sign up in your yard. You open your doors for, between 1 to 3 p.m. on a Sunday afternoon, and you let people come in and look. I really hope that you all realize that doing something like that for your business can be really, really damaging to your business, okay? Look, there's a time and place to tell your customers, your employees, and your vendors that you're selling your business. It's not the day you list your business for sale. And I got 2 case studies here to illustrate this point. Case study number 1 was a landscape business here in Minnesota. This lady came in, wanted to list her business with us. She listed with the broker. The broker said, okay, we're going to keep this quiet. Don't tell your employees, don't tell your customers, don't tell your vendors. She said, oh my gosh. She said, I have to tell my manager. And we're like, no, you don't. There's nothing to tell him yet. You still own the business. You still are running the business. There's no buyer yet. So there's nothing to tell. She said, look, my manager's been with me for 10 years. He's the reason I'm successful. I just feel I owe it to him to tell him that I'm trying to sell my business. So against our advice, she told her manager. 6 months later, we still hadn't found the buyer for her business. Remember, I told you it takes, on average about 8 months right now to sell a business. So 6 months goes by, we haven't found her buyer yet. But guess what? In those 6 months, she not only doesn't have a manager anymore, he resigned, but she now also has a new competitor. He opened up his own landscape company, all because he was worried that if she sold the business, he'd be out of a job or his role would change. So he went ahead and, assumed the worst possible scenario for himself. And so then he went ahead and just took matters into his own hands. And look, employees, it's human nature, right? When they hear businesses for sale, they usually think the worst. What's wrong? Well, is it financially hurting? Is there no money, et cetera, right? I mean, they think the worst. And you could have employees, if you tell them you're selling your business, you could have employees that, do like this landscape manager did and quit their business. Or you can have them, they resigned and took another job somewhere. But you could also have maybe what's even worse, and that is that they stay with you, but they become empathetic, that they stop doing all the little things that made them a successful employee, that made your business a successful employee. They start cutting corners. Maybe they start, stealing out of the till a little bit or taking inventory home, right? Lots of things that can happen. So it's just important that you understand that employees, while you love them and you may have some really valuable people that have been with you a long time, until you sit across the table and someone hands you that check and you give them the keys, it's still your business. And you're going to want your employees to be part of that business and run that business like they have been. And there's nothing to tell them until we have a buyer. The print shop in Mississippi was a total different situation too. This owner told his whole staff that he wanted to retire and he put his business up for sale. And we actually found a buyer for him. And then one day he came into work in the morning and there was all his employees, there was 6 of them, in a circle with an empty chair in the middle. He sat down in the empty chair and they said, John, if you sell your business, tell the buyer we all quit. That was 4 years ago in August of this year. It'll be 4 years ago in 2017. I can tell you that this guy still owns his business. He is now basically a hostage in his business, or he was for a long time. He learned the very hard way that you got to keep it confidential. So all of our marketing is done to advertise your business in a confidential manner. I'll just give you a good example. If we were selling a Subway shop in my home city of Woodbury, Minnesota, I would not say Subway restaurant for sale in Woodbury, Minnesota. My advertising would say nationally franchised, sandwich franchise in the greater Twin Cities market. I give the buyer enough information to understand what the business is and the general whereabouts. The rest of it, they got to call me and we have to have a conversation. So we're going to keep it confidential from your employees, from your customers, from your vendors. Next, my computer keeps freezing up. Next, don't let the internal problems fester. Look, guys, if you think back to when you bought your business, whether you started it from scratch or you bought an existing business, just think about what kind of apprehension you had. Just think about the nervousness and the sleepless nights before you pulled the trigger, right? Buyers are already nervous when they're looking at buying a business. If they are looking at your business and as they're doing their due diligence, they're uncovering skeletons in the closet, uncovering issues in the business, all that's going to do is going to send them to say, this isn't the business for me, right? So here's the point. Fran Tarkington wrote a book a few years back, and one of his chapters was bad news doesn't age well. And it's very true in business ownership. If you got problems in your business and they're out there, fix them. Take the time to fix them. Yeah, you may have some short-term pain, but the long-term gain is you're probably going to have a better business, higher profits, higher sales, better customer service, and you're going to have a more sellable business when you go to sell. And look, sometimes as a business owner, it's very difficult to walk into your business, the same business you've been walking into for many years, and kind of put a different hat on, put a buyer hat on versus the owner hat on. But if you could do that when you go back to your businesses, next week, walk into your business with saying, if I was going to be a buyer of this place, what wouldn't I like? And anything you find, fix it now. It's going to lead to higher satisfaction now, and it's going to lead to a more sellable business down the road. Price it right. At the end of the day, guys, nobody's going to overpay you for your business. So when you go to market, you got to be priced right. We like to say that we like to price our businesses on the high side of reasonable, but there has to be that reasonable twist to it in order to get the business sold. Don't be overly negative or boastful as you're talking to potential buyers. Just be truthful. Okay, but it's funny. Sellers don't mean to, but they can kill many of their own deals, and they do it more often than attorneys and accountants kill the deals. I'll give you a prime example. I was in a meeting one time with a buyer and a seller, and the seller actually said to the buyer, "I don't think you could do what I do on a daily basis." And the buyer said, "I guess I'm not going to find out." That kind of stuff is what I'm talking about. So you don't want to lie. You want to answer questions, but you don't want to be overly boastful or negative when it comes to selling your business. Understand financing options. Hopefully your business is good, good cash flow businesses. It can be bank finance and you can get cashed out at sale. If your business isn't as strong, you might have to be part of the financing solution and offer seller financing. By the way, if you have a good business, you might want to consider seller financing. Seller financing has lots of positives to it. It leads to more money. It leads to tax advantages. It leads to passive income. So there's lots of reasons to look into seller financing to sell your business. Some more do's. Be available to help train and transition the owner. Like I mentioned, your last day of business, the day you sell your business, the day you hand over the keys, won't be the last day you work in your business. There's going to be a transition time. So be available for that. Sprint to the finish. Guys, we've covered a lot of ground here today, but I just want to reiterate something that I've said a couple times, and that is, until you sit across the table from someone and they give you that check and you give them the keys, you own the business. And it's really important that you go ahead and run the business as hard as you possibly can until that day. Don't make the mistake that this Ace Hardware owner in North Carolina made, where he thought just because the business was listed and just because we found a buyer that the business was going to be sold. Because that buyer ended up backing out of the deal 4 months later because the business had taken a turn because the seller didn't sprint to the finish. He stopped doing some things that he had done all these many years that made him successful, but he thought he didn't have to do it anymore because the business was going to be sold. The home healthcare company in Michigan did the exact opposite. They sprinted as hard as they possibly can. And when we finally found a buyer 6 months later for their business, we actually raised the price because the business is actually doing even better than what we were advertising. So until you get that check, it's your business. You got to sprint to the finish. Sell when business is good. We talked about this, understand the market that you're selling into, and understand that when your business is at a high, look, your business is a stock, right? It's a stock. And so you want to sell when it's high. You want to sell when your business is good. And if you can time it where the market's good and your business is good, you're easily going to maximize value. The last thing that I'm going to advocate for is consult with professionals. Look, guys, you guys are only going to sell your business once. And for many of you, it's going to be the single biggest financial transaction that you will do in your lifetime, okay? Every professional you see on this list here, business broker, accountant, lawyer, tax attorney, etc., if you hire them as part of the business sale process, it's going to cost you money. It will. You're going to write a check to them. But I am going to say that if these professionals do their job and do it well, it's going to net you more money in your pocket, even after you pay them, than if you had done it without them. Okay. And I really mean that when it comes to business brokers. There's been studies done that show that brokers typically can get 20 to 30% more for a business than persons selling the business on their own. Brokers typically charge 10 to 12%. So they should pay for themselves. Tax attorneys should pay themselves with the money they save you. So again, it's your business. You get to make the final choices, but consider using professionals. You're only going to sell once. Do it right. Maximize the value of your business. All right, so I'm going to clear up here. We only got a few minutes left. I'm not going to spend a lot of time talking about Sunbelt. I'll just say a couple things about us as an organization. We're the largest business broker in the world. We have lots of different ways in which we can help big people that are considering selling their businesses. We have a traditional brokerage service where we do everything from top to bottom. Many of our offices offer consulting. We have valuation services, so we can help you put a value on the business, including I'd be happy to help anybody who's considering selling their business do a free value range analysis because you're part of HPBA. So there's, we're here to help, guys. We're here to help you. In my role, I'm actually not a broker. My role is to create the relationship with the HPBA. And I'm here as a resource to you. So if you just want to kick things around and ask generic questions, find out a little bit more about what the process is like or how it's going, when the market's going to change, all those things that you might have in your mind, you are free to call me at any time. My contact information is on the screen. My email is there as well. And again, I'm a resource. The HPBA wanted you to have this resource. Because again, they know that the upcoming resales markets, the current one is great. The upcoming ones might not be as great. So they wanted you to have some resources to help you navigate those waters and to maximize the value of your business at sale. So that's my presentation. I thank you all very much for the time.